So, you finally hit that seven-figure mark. $1 million? Sounds like a lot, right? But here's the cold, hard truth. If you don't it right, that million can vanish faster than it arrived. Most people think $1 million means Ferraris and private islands. But real wealth is about making sure you never have to work a day in your life again. Today, I'm going to show you exactly how the top 1% manage $1 million portfolio to turn it into generational wealth. Let's dive in. The biggest threat to your wealth isn't the IRS or a stock market crash, it's you. It's the human brain. We are wired to spend what we see. It's called lifestyle creep. You get the million, and suddenly that Honda Accord feels like a tin can. You want the Tesla Plaid, the custom-built home in the suburbs, and the designer wardrobe. This is how millionaires go broke. To manage $1 million like a pro, you have to adopt the silent wealth mindset. You need to look at your bank account not as a spending fund, but as a seed garden. If you eat the seeds, you'll never have the harvest. Before we talk about making more money, we have to talk about keeping it. Your biggest expense in life isn't your mortgage, it's taxes. In the United States, once you hit this level of wealth, you become a target. Uncle Sam wants his cut, and if you're not careful, the cut could be 30, 40, or even 50% of your gains. First, we need to talk about asset location. It's not just what you buy, but where you hold I. You need to maximize your tax-advantaged accounts. We're talking about backdoor Roth IRAs, 401ks, and health savings accounts. If you're an entrepreneur, we're looking at SEP IRAs or solo 401 kiloseconds. Next is tax loss harvesting. The pros don't just win. They use their losses to offset their gains. If a stock drops, you sell it to cancel out the taxes on a winner, then buy back a similar asset. And let's talk about protection. You need umbrella insurance. In our litigious American culture, having $1 million means you have a bullseye on your back. A simple car accident could lead to a lawsuit that wipes out your entire portfolio. An umbrella policy for $1 or $2 million costs almost nothing but protects everything. How do we actually invest this million? You cannot leave it in a checking account. With inflation hovering where it is, leaving $1 million in cash is like burning $50,000 a year in a bonfire. You are losing purchasing power every single hour. The golden standard for American wealth is diversification. But I'm not talking about buying 50 different stocks. I'm talking about index funds. Look at the S&P 500 historically. It has returned about 10% annually. If you put that million into a total market fund like VTI or VOO, you're essentially owning the 500 biggest companies in America. They do the work, you get the check. But at this level, you want alternative assets. Real estate is the classic millionaire maker. But don't go out and buy a single rental house. Look into real estate syndications or REITs. This allows you to own a piece of a 300-unit apartment complex where professional managers handle the tenants while you receive passive cash flow. Then there's the 4% rule. This is the holy grail of finance. If you can live on $40,000 a year, your $1 million portfolio will theoretically last forever. That is true freedom. Let's talk about the invisible traps. The most dangerous thing you can do with $1 million is buy a house that's too big. In America, we love our mansions. But $1 million house comes with $20,000 in property taxes, $10,000 in insurance, and $15,000 in maintenance. Suddenly, your wealth is being sucked dry by a pile of bricks. Wealthy people buy assets. Poor and middle-class people buy liabilities that they think are assets. Boat is a liability. A third car is a liability. A vacation home that sits empty 10 months a year is a liability. If you want to manage your million like the elite, you follow the 2nd of October 24 rule for cars. Or better yet, buy a 3-year-old car in cash and drive it for a decade. The goal isn't to look rich, it's to be rich. When you walk down the street in New York or San Francisco, the guy in the plain t-shirt and jeans usually has more in his brokerage account than the guy wearing head-to-toe Gucci. Stealth wealth is the ultimate flex. Finally, we have to talk about the exit strategy. Managing $1 million is a marathon, not a sprint. You need to review your portfolio every quarter, but don't react to the news. Wall Street thrives on your fear. When the market dips, the millionaires don't panic. They go shopping. They buy the dip. Think about your legacy. Do you have a living trust? If you die with $1 million in a bank account without a trust, your family will spend years in probate court. and lawyers will eat up a huge chunk of your hard-earned money. A trust ensures that your wealth goes exactly where you want it, instantly. Managing $1 million isn't just about the numbers on a screen. It's about the hours of your life you get back. It's about the peace of mind knowing that if your boss fires you tomorrow, you're fine. It's about being able to help your parents or start that business you always dreamed of. Stay disciplined. Stay humble and keep your eyes on the long-term prize. You've built the foundation. Now, let's build the empire. Thanks for watching, and I'll see you in the next one. Don't forget to hit that subscribe button for more wealth building strategies.